Good evening and welcome back to the latest edition of the InvestTalk market analysis for the week ending November 29th, 2024. Hope everyone had a wonderful Thanksgiving holiday and we are entering holiday trading. And that's why I'm titling this video Bullish Holiday Trading Begins as Expected. I've been saying this for a while that the market had a pretty narrow opportunity to try and uh, have some sort of decent pullback, but there really wasn't much. And now we're into holiday trading, just a handful of weeks left in the year. And usually this time becomes light volume. Light volume markets tend to float higher because there's a natural flow of money going into markets, especially US markets, on a consistent basis. So if there's not the other side of the selling, right, selling volume coming in, you're generally going to get higher prices, and that's what you saw, especially here on Friday in a shortened day. This is one day, so that was on Friday. But this is the week, okay? And so overall, like I said, pretty bullish. Only Nvidia was down. Obviously, that's kind of a market darling right now, so it could be a harbinger of things to come, especially with semiconductors weakening overall. You see that Broadcom down 1.5% there, Oracle down 4% on the week. And if you look at other Mag 7 names, though, it was a pretty solid week overall. Okay. Yeah, there we go. Google, Microsoft, Berkshire, JP Morgan. So, the only energy was down pretty much on the week. Everything else was pretty much higher. Now on the economic front, let me pull up the economic numbers here. There you had the new single family homes sold that did tick down in October. This is feeling the effects of higher interest rates, and we've talked about that time and time again. And here's the 10-year right now. And now it has pulled back. So if you look, this is October, right? This is the 10-year was moving pretty dramatically, 3.7 all the way up to 4.3. So that is reflected in the mortgage rate, and that becomes a more difficult housing market to operate in. And but obviously the recent drop will certainly help uh, that market, but you're not seeing that, right? You don't see that until November, probably even the December numbers. If you look at continuous claims for unemployment, that did tick higher to a new cycle high, 1.9 million. Shows you that the labor market is continuing to be weak. On the inflation front, you did get bad inflation numbers from a Fed policy perspective, right? Continue to see this downtrend, and now you're seeing the first month in October where the prices were a bit higher, and that was of note. Pending home sales did move up though. So this is pending home sales in October year over year. So remember, this is the first one I was showing you is new single family homes. So what's just showing you is the existing market is actually a bit stronger than that single family market, at least for the month of October. Now, that could be an anomaly, but we shall see. But that was pretty interesting. The most interesting part, though, right, the light economic week with the holiday was really the move in the Fed expectations. Well, over the last week, a 25 basis point cut on the 18th of December had moved from 52% all the way up to 66%. So a week ago it was roughly a 50-50 coin toss. Now it's more like two-thirds they are going to cut. Okay, and so uh, that's interesting, and was some of the reasons for the market movements this week. Right, the dollar was down on the week. You saw UP reverse a little bit. Same with the yen, and this is probably the biggest risk in the markets right now. Remember the yen carry trade unwind in July that precipitated a sell-off in markets. You definitely saw the potential for that over the last few days of the week. Was the yen strength? Does this continue into next week? Does it create more of a carry trade unwind? That's something we'll certainly be watching for. So be on the lookout for that. Um, let's get to the broader markets though. Pull up a few things. Here's the Nasdaq. So the Nasdaq, was strong to close the week, but still you're below the previous week's high. And then you look at the SPX, that also, although that is much better, right? It's at a new 52-week high. But if you run like a small cap to an SPY, ratio, which you can see is small caps are now in a bit of an uptrend. So small caps are outperforming. That's certainly of note. And if you look at growth versus value right here, um, it's not growth versus value. That is credit spreads. Credit spreads are obviously tight, and so no credit market worries on that front. Here's the growth to value trade. This started to break down late last week and early in this week, but you got a little bit of kind of holding water, especially on Friday. But you don't want to glean a lot from a holiday shortened low volume day like Friday. Doesn't really tell you a whole lot about markets. So you have to see some follow through on Monday and next week. So we shall see on that front. Let's see the move index. That's something I will continue to watch. This has moved down. I think that's obviously positive for markets. We talked about this. This is the volatility of the treasury market and bond markets. And so if this goes up, that means, as our treasury auctions going off as planned, is liquidity in the bond market sufficient? When this is low, the answer is yes. When it's high, it's suddenly becoming stressed. Okay. And so that is looking good as we head in once again to the holiday shortened season, holiday trading, excuse me. Here's the VIX, the normal VIX. This also is trending lower. That is positive for risk assets. You can't really say anything but that on that chart. Gold has had a nice bounce back here, refresh to the 100-day moving average. I think overall the technical picture looks pretty sound for gold. Um, let's look at some of the industries. You have industrials that is powering to new highs. You have energy. Energy did kind of cool off this week, but that's in a nice relative uptrend compared to the rest of the market post-election. So something I'm definitely watching. XLF financials are doing well, even if you go straight to the banks, the KBE index, that cooled off this week, but still looking pretty nice. The areas that continue to struggle, though, you're looking at biotechs, right? Bounce back this week, but still, this isn't a downtrend since the election. I can head over to healthcare. Also a nice bounce back, but still in the midst of a downtrend. We're not making a new higher high or anything like that. This is just a bounce into resistance, and we'll see what type of follow through or lack thereof we get for next week. Something I will continue to watch, and obviously cabinet member announcements and all that will play into how the market digests the Trump presidency. And inauguration day is, what are we, about 50 days away, something like that, which you could say it's a while. You could say it's going to go fast. The holiday season tends to go by fast. So, we'll be coming up on that very, very soon. What are some other sectors I want to follow? Utilities, those got some strength. Obviously, rates coming down, that was helpful. Same with with consumer staples. It's also getting a bit of strength there, right? You see the difference here between like a biotech and healthcare, where this has now made a new higher high from this little pivot back here. Okay. And so that's something that I'll be continuing to watch. So healthcare just looks very weak. Utilities look strong. Consumer discretionary looking strong as well. The consumer is in good shape. Equity in their homes, strong balance sheets due to all the stimulus, etc. So if you're looking for a crack in the economy, it's probably not going to come from the consumer. It'd probably come from the corporate side, laying off workers, etc. But I just don't see any of that in the tea leaves here. Nothing is showing that this is a problem, right? I go back to this chart. This is credit spreads, right? Whenever this is moving higher, credit spreads are tightening. It means there's plenty of liquidity in the corporate bond market. Companies could roll over their debt. There's not a risk, not a worry that we're going into a major recession or anything like that. So that overall looks fairly good. Nvidia, that one did get a bounce on Friday. Once again, can't really glean much from that, but this is starting to definitely show some, MACD divergence here and weakness. And you zoom out to a weekly chart, it's looking very similar, right? MACD divergence, not making new highs when it did make a new high. And then you move over to like the SMH, having similar action here, right? So usually the semiconductors lead the technology sector to the downside, and you're getting the similar thing as XLK, right, where you're getting a MACD divergence. You're approaching those new highs, obviously stronger than the semiconductors, but not looking like a wonderful technical picture. And you have, I think there's still going to be a lot of worries of Department of Justice. I think appointee recently was somebody who was okay with Lena Khan and being aggressive toward the big tech companies. So I think that should be interesting to watch those and see what type of reaction those have as odds of certain cabinet members being appointed, et cetera, increase or decrease. So that was Google. You saw that they're with an ongoing lawsuit. They want the Department of Justice wants them to sell Chrome. Obviously, Amazon is going to be in the crosshairs. Apple, that one looks one of the strongest of the Mag 7 names. Netflix is probably the one that would be the strongest I see, even though we did have a little bit of reversal. What was that, Monday? So we'll see if we can recapture the upside there. Microsoft, that one generally is weaker than the bunch. Um, this is kind of a bearish pattern, honestly. Um, so something to watch for, see if you can follow through. Tesla, had a surge post election, kind of consolidating. It looks okay from a technical perspective. You had some pretty wide ranging red candles this week. So, uh, what does that portend for next week? We shall see. Obviously, like I said, this Friday trading, don't want to put too much weight into that one. What else do I want to get to? Yeah, that's kind of the market right now. I've been saying this. So once you get into light and holiday volume, the asset prices tend to go up. And I just don't see a catalyst. Besides that yen carry unwind, um, that's the only thing I could see. We have our Fed meeting. They're talking about cutting rates, and the yen, Bank of Japan could be increasing rates later in December, and mainly that's because their inflation is starting to tick up again, and so uh, that's the only thing I see though. Liquidity is robust. You're into some structural option making uh, dynamics that are likely to have investors and market makers chasing the market higher into year end, and frankly, probably into OPEX in January. And so you just have this 6, 7 week period going forward where you're not likely to see a catalyst that will bring down the market. Markets up, people want to take their gains, pay taxes going into year end. For the most part, no, right? And so that's, I think, one thing that might hold up a lot of the market as a whole, and a lot of these tech names, even though there's some divergences and things that starting to look weak, and momentum is weakening across the markets, and especially in tech land, but that you might not see that follow through until next year, when more people are apt to take some of the gains that have been made. Think of Nvidia, right? Think how much money has been made with Nvidia. Do you want to take gains this year or next year if you think it's overvalued and things are going to reverse potentially? You want to wait most likely, and so that's where we're at. That's where we're ending into the month of December, and I hope you continue to follow along on InvestTalk. We appreciate you tuning in, liking, and subscribing to this channel. And a reminder, the contents of this video are for educational purposes only and should not be construed as a recommendation of buy or sell security or to participate in investment strategy. The views are my own and do not represent those of KP Financial or those associated. Hope you all have a wonderful weekend.